A few days ago, Canada Mortgage and Housing Corporation announced some big changes to their lending program. So today I'm being joined by Tim Hill from Dominion Lending Center's Primex Mortgages to add some clarity to the situation. Tim, thanks for joining me, and what's happening out there?
Uh, Thanks for having me, Gary. What's happening out there is CMHC has actually made some pretty significant policy changes. It's going to affect a lot of home buyers.
Okay, and what specifically are there? Could you outline them for us?
Yes, of course. What they've done is they've actually made the mortgage qualification standards a lot tougher than they used to be. Specifically, they have a qualification ratio called GDS, gross debt servicing. And that's really just, your mortgage payment against your income. And that's been reduced from 39% to 35%.
Wow.
And the other piece is that the minimum credit score has gone from 600 to 680. Again, a very significant change for a lot of people.
Right. How much do you think that would equate to the average borrower, Tim?
Well, the GDS change from 39 to 35 is actually very significant. Specifically, you're looking at about a 12% drop in affordability. So if you want to just, look at some sort of ballpark realistic numbers, if you were buying, say you had just qualified for a $600,000 home with a $50,000 down payment, you're looking at a $550,000 mortgage. Now, under CMHC's new policy, that 550 is cut back to 485. So, your $600,000 purchase is now a $535,000 purchase. It's pretty radical. And that's assuming your credit score is over 680.
Wow. So for a borrower, is there anywhere else they could go then to compensate for these changes?
Yes, absolutely. And that's sort of the one big caveat to all these changes is that Genworth and Canada Guarantee also exists in the marketplace. They're two privately owned insurance companies. They have actually existed alongside CMHC for quite a while. A lot of borrowers who get insured mortgages don't even realize that their mortgages are not insured with CMHC. They're insured with one of the other two companies. Mm-hmm. And what's great about them in this circumstance is that they said, no, they're not going along with CMHC's policy, which they've traditionally done in the past. They're saying, no, we're going to stick to the old policy. So the old, GDS limit of 39% and minimum credit score of 600. So if you're a borrower that, would have been significantly affected by the CMHC changes, you may not be, because your lender can just take your mortgage to Genworth or Canada Guarantee. And chances are they would have done that in the past anyway. So more things change and more they stay the same.
Well, that's good news, Tim. Are there any other good news pieces we can talk about?
Well, certainly the most significant one is where interest rates are at. And interest rates, as I think most people are aware, are incredibly low right now. You've heard the term historic lows used quite a bit in the last few years. Well, this time we really mean it. 5-year rates on both fixed and variable mortgages are, below, sometimes significantly below 2.5%. And that's pretty much unheard of. We've hit 2.5% before, but to be as where we are now with every lender significantly below that, it's a great time to be a buyer. There's another piece of good news too, is that those interest rates are part of the formula used to calculate the stress test qualification. So in fact, the stress test standard is actually dropped a little bit, which has improved affordability. So, between Genworth and Canada Guarantee staying in the market, slightly improved stress test, and incredibly low rates, it's actually a great time to be a buyer.
Great. Well, I love to hear the good news. So, Tim, thanks so much for joining me today to add some clarification.
Thanks, Gary. It's always my pleasure.
All right.